In the metals quadrant, taking a look at the December gold futures, gold ended lower for the second consecutive week, ending down over 3.5% from its all-time highs now and down 2.8% on the week. Today is the second session lower for gold prices over the last three, with the high today being 27.1780. That was up 0.44%, so just a little bit more than 0.4%. And the low today, 26.8730. That was down 0.68%, just short of 0.7%. And as we come into the close, a little bit of time left in the session, we're still down around 0.5%. After a post-election spike in yields, U.S. Treasury yields actually finished the week lower in the U.S., which may surprise some people, but considering that immediately after the election we had a double-digit spike in yields in most of the yields represented in the U.S. yield curve, then over the next few days we came back to basically starting levels, or I should say slightly lower. When you look at the 10-year, for example, we're actually down 7 basis points on the yield side on the week. The 5-year is down 5 basis points. The 30-year is down 8 basis points. Now, this should be a little bit supportive for gold, but because of another area of the curve, like the 2-year, which is up 1 basis point, it's not working out that way in the short term. We'll have to see next week. We also had the FOMC statement yesterday after the meeting, which was neutral, but we had a slightly hawkish press conference simply because Jerome Powell offered no guidance in his press conference as to what would happen in the December meeting. That's being viewed by a lot of people as being slightly hawkish, and dollar strength is coming out of that, and you have the inverse relationship between gold and the US dollar. If you look at the CME Fed Watch tool, there's now only 25 more basis points of rate cuts priced in through the end of 2025, and that is a big tone shift for cuts, which might be part of the reason that we're not seeing as much activity to the upside in gold as we were, say, a couple of weeks ago.